If you want awesome products at great prices, check out the in the description. President Trump's shifting sands, a vote of confidence after a Fed fury. The White House narrative took a dramatic U-turn this week, shifting from fiery pronouncements of imminent dismissal to a surprising vote of confidence for Federal Reserve Chairman Jerome Powell. Just days after unleashing a torrent of criticism, branding Powell a major loser, and declaring his termination cannot come fast enough, President Trump now assures the nation he has no plans to fire the Fed chair. This dramatic shift followed a market rebound from a sharp sell-off fueled by precisely those fears, the fear of a Powell ouster. The president's recent tirade against the Federal Reserve has been nothing short of a roller coaster. He's publicly dubbed Powell too late, repeatedly demanding immediate interest rate cuts to bolster the economy. This aggressive stance, however, directly clashes with the Fed's cautious approach. Inflation stubbornly remains above the Fed's target of 2% annually, a crucial factor influencing the central bank's monetary policy decisions. Further rate cuts, the Fed argues, risk exacerbating inflationary pressures, potentially undermining long-term economic stability. The tension between the White House and the Federal Reserve highlights a fundamental clash in economic philosophies. President Trump, prioritizing short-term economic growth and market performance, advocates for aggressive rate cuts to stimulate immediate economic activity. This approach, he believes, is vital to ensure his re-election prospects remain strong. The president's focus on immediate gains, however, often overshadows the potential long-term consequences of such policies. Conversely, the Federal Reserve operates under a mandate of price stability and maximum employment. Their decisions, therefore, are guided by a more nuanced, long-term perspective, factoring in economic indicators and potential risks beyond the immediate market fluctuations. The Fed's reluctance to heed the president's calls for immediate action underscores this commitment to a measured and data-driven approach to monetary policy. Adding further complexity to this delicate situation is the impact of President Trump's trade policies. Last week, Chairman Powell explicitly warned that the president's tariffs on numerous trading partners could exacerbate inflationary pressures, further complicating the Fed's already challenging task of maintaining economic stability. This underscores the interconnectedness of domestic and international economic policies, highlighting the limitations of addressing complex economic issues through isolated, unilateral actions. The president's recent change of heart regarding Chairman Powell raises crucial questions about the nature of his influence over the independent central bank. While the president's power to appoint the Fed chair is undeniable, his recent outburst and subsequent retraction highlight the ongoing tension between political pressure and the Fed's commitment to maintaining its independence in setting monetary policy. This delicate balance is crucial for maintaining the integrity and effectiveness of the Federal Reserve, a cornerstone of the U.S. financial system. The evolving dynamics between the White House and the Federal Reserve promise to remain a central theme in the ongoing economic narrative, with significant implications for both domestic and global markets. The uncertainty surrounding this relationship continues to generate volatility and underscores the complex interplay between political pressure and economic realities in shaping the nation's economic trajectory.